Welcome, everybody. I'm Mark Dannenberg. This is the Options Moneymaker question and answer session. Today, September 23rd, 2020. Erin Rumley is with me this evening also, and you'll be hearing from her later. So before we get into Q&A, I just want to make sure you understand exactly what our role is in being here. We firmly believe that it's important to learn to trade before you trade to earn. Now, trading to earn is what we are all about. If we're going to be traders, that's what we're looking for. Is we're looking for profits, we're looking for opportunities to lock in profits and build an income for ourselves. But it is so vitally critical that we invest some time and energy in learning how to do it properly first. We recognize that if you are on a path to learning, that there are questions that come up along the way. You may have taken tons of notes, you may be looking stuff up, you're trying to figure out how to fill in some blanks. Now, we'd like to believe that we have provided a comprehensive education, and the materials that we provide allow you to really learn and understand how to properly trade. But the reality is, I know that there are questions that can come up that may not be covered in the material that we have created. So we, as a team, set aside time every other Wednesday to make ourselves available to answer questions that you might have. And so the questions could be about the adaptive entry system. That's from our friends at New Cycle Trading. We use that to identify trends. We use that as our primary tool for entering trades. Questions could be about our Profit Sweet Spot Matrix, which we use for tracking the daily Cycle Finder Plus crosses. We have over a year and a half of historical data in there. Performance of any type of system that you're using is going to vary over the course of 12 to 18, 24 months. But when you build the amount of data that we really have some comprehensive data that helps us understand what type of performance we could expect from our watch list of stocks and indexes. The live trading room is where we are active every single day, real-time trading. We're providing real-time support for members of our community that join us in the live trading room every day. We've had a great group of people this week. We have some people who are just checking us out, see whether or not it's right for their personal trading business. But the live trading room, there's questions that could come up that perhaps we've not addressed during the live trading room session. Now, options education and futures education are the two areas that we focus on. Our Profit Builder Plus is the program for options education. If you're looking to learn how to trade options, you want to understand what an option is, what a call is, what a put is, what a strike is, how to choose expirations for your options. You want to understand how to create spreads, diagonal spreads, vertical spreads, calendar spreads. Those are all contained in the options education program. And the really cool thing about the way I feel we've designed a learn to trade opportunity for our community is the adaptive entry system is the common denominator whether you choose to trade options or whether you choose to trade futures. Now, futures are typically perceived as a extremely high risk. Many people that you would tell that you're trading futures would tell you, oh, you need to stay away from those, you're going to lose all your money. Well, we've put together a futures trading education program that will help you learn the risk and reward of futures and how to limit the risk and exposure that you have when you're trading futures. And primarily in our live trading room, we're trading futures throughout the day. We have a lot of traders in our community who trade options also, but we are profiling the NASDAQ 100 futures chart on the adaptive entry system every day. And we use it to also profile earning potential, how to trade to earn, and how to then treat your trading as a personal small business, not just some sort of a game you're participating in or a gambling and hope it works out for you, but how to think of your trading as a business. I'm going to talk about that just for a couple minutes before we get to questions. And then if you have any questions at all about New Cycle Trading, please let us know. There is a forum on New Cycle Trading which you can leave comments, you can ask questions, and that is at traders.newcycletrading.com. If you have questions that you're thinking about right now, go ahead and put them in the chat and we'll get to those in just a couple of minutes. So one of the things I want to highlight here is the adaptive entry system and the personal trading plan. So the adaptive entry system is our tool that we use for trading. It's how we're going to know when we are getting in and out of positions. And this is what the adaptive entry system looks like if you're not familiar with it. It's basically a very, very simple to understand set of signals where when you have a green highlighted bar, vertical bar, it's telling you to go long. So that's an expression we use when we're trading futures. If we are trading options, we're going to buy a call or trade some other strategy, spread strategy that would benefit from the price of the stock or the index or the futures going higher. Red vertical highlighted bars, you're going to go short. If you're trading options, you're going to buy a put or some other downward bias position strategy. If you're trading futures, you're going to go short. We have made this so ultra simple. We've collaborated with New Cycle Trading. We have, I think, a good grasp on what traders are looking for, and New Cycle Trading has a very intelligent team of programmers who also happen to be traders. So they are like the perfect group of people for us to work with, collaborate with, and we're pretty excited about the software, which allows any trader to just simply follow along on their own or with our support in the live trading room, being able to identify when to get into positions and when to get out of positions. So just a couple of thoughts on that. From July 6th, when we first rolled the adaptive entry system out to our community, through today, trading the NASDAQ 100 futures, that's what we're using to profile, but you could trade S&P 500 futures, you could trade the Russell 2000 futures, you could trade gold, you could trade oil, you could trade options on Amazon, Google, Tesla, Shopify. We have a variety of stocks that we have in our own personal watch list that we could trade options on using the exact same long signals and short signals from the adaptive entry system. But just to kind of give you an idea, so this is just a sample of what the opportunity is that exists, not saying that everybody should trade NASDAQ futures, but it gives us a great opportunity throughout every day to do something consistently and show you what the performance could be. And we have many people that follow along with us. There are a couple of categories, a couple of measurements that we use in assessing the overall performance of the adaptive entry system. One is when we look at all of the signals. Now there are 4 distinct signals within the adaptive entry system. There's a trend bias signal that tells you pretty much what direction the overall market's going to move. There's a trend continuation signal that if we've already taken a profit and we're out and the trend is continuing, it offers us an opportunity to re-enter that trend. There's a consensus signal, which is interpreting a variety of indicators behind the scenes, and in one simple signal presents to you an opportunity that this is a directional bias in the most immediate nature. And then there is the momentum signal, which can frequently be a retracement within a trend. No trend ever moves straight down or straight up. If a trend is moving lower, there are going to be retracements where there's going to be short periods of time that there's going to be a move to the upside before we resume moving lower. Those can frequently be momentum signals. Anyway, so if you take all of the signals, all 4 of the signals, and you started when the regular market session opens at 9:30 every day, and you just traded until 12 noon. It's a limited amount of time trading. It's not the entire trading day. The average profit per day that we have seen so far is $415.63, and that's trading one contract of the NASDAQ 100 futures. So one contract requires $500 of margin, meaning that you have a certain amount of money in your account. you have to allocate $500 of the amount of money you have in your account to open one single contract. So $500 of margin has been generating just over $415 of profit on an average day. And in the personal trading plan, which I'm going to show you here in just a minute, we do a 12-month income projection where we scale contracts. Maybe we start with one contract, we scale up to 2 or 3 or more contracts. And over a 12-month period, that income forecast right now, having started the account with just $5,000, is projected at just over $200,000. I'm going to show you how we get there in just a minute. Now we also monitor a second category. There's a variety of ways we can monitor this, but we monitor a second category which is taking only the trend bias trades. Those are the initial trade signals that are saying the likelihood of the underlying derivative is to move higher or lower. That is establishing a new trend, and the continuation signal. So it's basically everything aligned with the trend, and trading from 7 a.m. Eastern to 4 p.m. Eastern. We have a lot of people who want to trade a longer period of time. People who are typically more full-time traders, they've gone through a lot of learning to trade and now they're trading to earn. Well, that is averaging, that category is averaging $630.83 profit per day, trading one single contract. And the 12-month personal trading plan forecast is suggesting that the income for 12 months is $346,601, and that's starting with a $5,000 account. It is important, it is critical, in my opinion, if you are a serious trader, if you're not just playing at this as a game, which I don't think anybody should waste their time doing, but if you're a serious trader and you look at trading as your own personal business, it is absolutely imperative that at the end of each day, you use the tool that we have created here at Options Moneymaker called the Personal Trading Plan, and you update that personal trading plan with that day's performance. So I did not do this today at the end of the trading day. I wanted to do it here in the Q&A. So today's performance shows, we're going to start at 7 o'clock in the morning. A lot of people like to see what the individual detail per trade is. Now today was interesting. When we're trading NASDAQ 100 futures, we set 10 points as our profit target, and we set 20 points as our protective stop, meaning if there was a sudden and abrupt move, we don't want to expose ourselves to risk of more than 20 points. NASDAQ 100 futures is $20 a point. So that means we are willing to risk $400 each time we take a trade, and what we really are looking for is an opportunity to take $200 of profit. But once we hit $100 of profit, we're going to lock that in. So you see a lot of 5-point trades in here. That's because we're locking those in. But today, I think we had a higher frequency of 20-point stop outs than we do most days. And when I look at that, folks, that's not something to be emotional about. That's not something to be upset about. That's just a matter of fact. You're going to go through a lot of different market days when you are an active trader. And so here's my point. The summary for today in the two primary categories that we track in our personal trading plan is 9:30 to noon, taking all the signals, and 7 a.m. to 4 Eastern time, taking just the trend bias and the trend continuation signals. Well, today we actually made 0 points. We did 13 trades, but we made 0 points. We kind of broke even other than our commissions. Okay, well, that happens. Yesterday we had a loss. The day before, 1, 2, 3, 4 days prior to that, we had some really nice profits. So what I really want to emphasize here is, and I'm about ready to pull up the trading plan, it's far more important as a serious trading business owner to look at averages than it is to look at individual days. There are individual days that will make you feel euphoric and you're on top of the world and nothing's ever going to get in your way. And there are individual days that will just depress you and drag you down and discourage you because you're going to have losing days. That is the emotional roller coaster that so many traders live on. And what I want to do is to share with you that that's not necessary. So we had zero performance today. It's kind of funny, 13 trades. And in our other category, we lost 5 points today. So today was not a day that we're adding to our profits, but now I'm going to show you what that means. In our personal trading plan, we actually profile 2 different variations, as I mentioned. Personal trading plan is this tool that we have created for you. It's available to everybody. And what we're doing is we are allowing the personal trading plan to accumulate for us data that will help us understand what the average run rate is. What's the average performance when we look back historically? So don't get hung up in individual days, whether it's strongly profitable or it's a loss. Don't get hung up in individual days. What we want is to see what our average is. We're building a 52-week financial forecast. So we have about 11 and a half weeks that have already expired, and that data is already recorded. We've got another 41 weeks for our 52-week plan. So what are we going to base our future performance on? We're going to base it on what we have already accomplished. We've got a mix of winning days and losing days, winning trades and losing trades, and it's really important then to say, we may not like exactly what our performance is. We might want it to be better, but if we were to replicate exactly what we have done to date, what would that outcome be for a 12-month period? So what I'm going to do is what I said is the most important thing you can do at the end of every day. Today is Wednesday. I'm going to go over to our data entry, and we did 0. So 0, and we did 3 contracts, so 0 times 3 is still 0. We had 0 profits and 0 losses today. Now, we traded 13 trades, and it was 3 contracts per trade. So we did 39 contracts. And that's just thinking here for a second. All right, so we did 39 contracts. So technically we had a loss today, but we lost $156. It's really not a big deal. So now what I do is the most important part of entering your data. I look at what my average is, and this number right here, the 23.43, is what the average winning day is. Of all of my winning days, that's my average. Of all of my losing days, that is my average. And I have lost 19 days in 11.6 weeks. Now my original plan, before I entered any data, when I said today is the first day of my 52-week personal trading plan, it assumes that you're going to have a losing day on an average 1 day out of every 5 days. Well, we're slightly ahead of that plan. So without any other information, if you wanted to get emotional about this, you go, oh, well, geez, 19 days out of 11 and a half weeks, I should only have 11 or 12 losing days. It doesn't seem like I'm being very successful. Oh my gosh, my losing days are averaging more than my winning days, and all of a sudden there's this mental spiral that starts to exist, and you start telling yourself a story about how you're not succeeding and it won't be possible for you to win. Well, the really cool thing about this trading plan is it takes all the emotion out of it, and it says, okay, if we were to continue at this rate and we have 19 days of losses out of every 11 and a half weeks, and we average 28.10 losing days and 23.43 winning days, what would that outcome be? Here is the most important part of updates. So our average winning day is 23.43. So I'm going to put in 23.43 because this is now helping us forecast beyond where we are today. We already have 11 and a half weeks behind us. I want to know what the other 41 weeks, 41 and a half weeks are going to be forecasted at. So the losing days are averaging 28.1 minus 28.1, and what we see here is that we have an income projection of $197,772. We started the account with $5,000. This is less than it was a week ago, but our numbers have changed a little bit. So I'm not measuring to where I was a week or 2 weeks ago. I'm measuring to where I am right now, and does that provide an income that I would find satisfactory based on having started with $5,000? If the answer to that is yes, come back, trade tomorrow, and just continue to focus on achieving your run rate that you have already established. Maybe you want to improve your run rate by taking a little more training, signing up for and participating in the live trading room so that we can help and guide you through some of this performance. I think that that's outstanding. If I didn't, this right here is telling you that the trading program has maxed you out at 3 contracts. You entered that. You decided that you wanted to keep your risk down to less than 3 contracts. But there's another limiter in here, and if you've worked with a plan, you already know this, or if you've listened to any of my updates, you already know this. When you start with $5,000, we're also telling the program, I don't want to allocate more than 10% of the balance of my account to margin for my contracts. Each contract requires $500 of margin. So in order to trade 3 contracts, I need $1,500 of margin that I'm willing to risk in my account. And in order to make that no more than 10%, I need a minimum of $15,000 in my account. So if the first limiter of your risk is no more than 10% of the balance of your account, the second limiter of your risk is kind of an arbitrary, what are you willing to put out there? And if you don't feel satisfied by the 12-month forecasted income, then change your contracts. What if you changed it to 4 contracts as your max? It will always be, no matter what you put in the number of contracts, it will always be less than 10% of the balance of your account that you are putting out there and exposing as your margin. And all of a sudden your income for 12 months could potentially be $251. What if you decided, I'm willing to go to 5 contracts? $500 per contract is $2,500. I won't see the program suggest 5 contracts to me until I have a minimum of $25,000 in the account. And that would get you to a $300,000 income. So I'm going to leave it at 3, and I'm going to update a little more quickly than I just did the other category so we can jump to questions here. The other category, 7 to 4, is we lost 5 points on 16 trades. All right, so again, we go over to our data entry field. We lost 5 points. 5 points at $20 a point is $100, and we're trading 3 contracts. So we lost $300 today. And 16 trades at 3 contracts per trade is 48 contracts. Okay, so now we're averaging 12 losing days in 11.6 weeks, so we really are right on pace there. That feels pretty good. Our average winning day is 34.11, so I'm going to put that in here. Oops, not 24, but 34.11. And our average losing day is 26.72, so I'm going to put 26 point, oops, my bad, minus 26.72. I do this every day. Every day, it takes a lot longer to explain than it does to do. It takes 3 to 5 minutes just to update your financial forecast for your trading business and see where that forecast is for you for the next, for the remainder of the 52 weeks that you're forecasting. So now at 3 contracts, your forecast is $335,399, having started with $5,000. I'm not going to guarantee that that's going to be your income. You'll know at the end of 52 weeks, but right now that's your forecast. There's no small business or large corporation that can guarantee what their income or net operating income is at the end of 12 months, but they measure it. I know I always did back in my corporate days, and I do in my own business now, small business, and in my own trading. They measure it, we measure it based on 1 month at a time. Now, in trading, you can measure it 1 day at a time. If you're trading futures, you're out of everything at the end of every day. You know what the outcome was at the end of every day. You plug in your performance. And what you're going to find is that the adjustments that you make every day, the longer the more data you've built, the further into the 52-week plan you are, the more those adjustments are just fine-tuning adjustments. They're not really big. So again, you can adjust your contracts. You can adjust your income. Maybe you decide you want to be ultra conservative. You could take it down to no more than a maximum of 2 contracts, and you have a $246,000 potential income. So that's the process that we go through every day. We just plug in the actual performance. We are basing it on the actual run rate. So I'm not doing this emotionally where I'm trading 1 contract for a week. I feel really good. I did well. So then the next week I trade 5 contracts or 10 contracts and I lose everything in my account. That's not a recipe for success. This is a methodical, planned, intelligent approach to building your trading business. So I think it's absolutely critical. All right, last thing, the adaptive entry system is an outstanding set of market metric indicators. And if you want to learn more about it, you can go to optionsmoneymaker.com/investor. And there you're going to be able to click on a link to view the results on a daily basis. Usually at the end of every trading day, I do a short recording of the performance for that particular day, and I plug the performance results into the personal trading plan. And you can also view a training video on the adaptive entry system, and you could learn before you ever decide to sign up. You can learn everything that we've taught about the adaptive entry system and that we talk about in the live trading room before you even sign up.